joining us, the Executive Vice President at Edelweiss. Abneesh, good morning. So the market yesterday made a lot of assumptions, right, with that 40% rally that perhaps everything is sorted. But you tell us, what's your call on the stock now?
No, we are seeing very good interest coming back in Z in the last few quarters that had got derailed because of the pandemic. Z's flagship channel, ZTV, had lost market share because it is not strong in crime shows and comedy shows. And when pandemic comes, there is an issue in terms of doing fresh content. So people like to see comedy and crime, in which Z has been historically weak. So I would expect definitely Z's market share to start bouncing Q2 itself. I expect around 100 bips improvement in Q2 and further improvement in the second half because Z is taking corrective action. See, Z is a network. There will always be some channels which lose market share and some which will be gaining. As a network, it is the second largest network with around 17 to 18% market share, Exo Sports, and Star is at 24%. I think with a professional board and renewed focus on content, Z has the opportunity to definitely close that gap. Second point is definitely, which is interesting investors, is the unlock play. So a lot of sectors have not advertised in the last 1 year, the discretionary travel and those kind of sectors. Those will come back strongly. FMCG, which is 60% of advertising, continues to remain very strong. And we have seen the good volume growth coming back and price hikes are also happening. In terms of comparison with print, the key pushback most investors give is TV a dying segment like print? In my view, no. For the next many years, we have a lot of new consumers to add in the rural India. And Z is doing the right steps by taking Z5. And so there will be cord cutting in India also. But consumer will shift from watching on DTH to watching on the OTT. And Z is a very formidable play there. They have cut prices also. So we are seeing very good interest coming back. This is a quasi-consumption play available at around 14-15 times and zero debt company. And if these concerns of Invesco, Oppenheimer get addressed, I am sure that there will be further re-rating of the company. We have seen marquee investors also coming into the company. So I would say that yes, multiple positives are coming out for Z in the coming quarters. Having said that, this is a segment, this is a sector in which there is a disruption. Z will have to invest in the business. Z5 will need more investing in terms of app, in terms of content. So there will be margin dilution, which is currently there. Most of that is already factored in. So we feel that this stock can definitely re-rate further. But there will be volatility in the stock in the near term, how the EGM pans out, what happens at the leadership level, at the CEO level, all those things will matter in the near term.
Oh, absolutely. But look at the markets party on the stock again today. And guess what? Before we went into the Ganpati long weekend, Z used to be a 180 rupees stock. Today, it's 280 plus and counting, 290. I mean, there's a fresh 10% move in the pre-open. Actually, on all other Z stocks as well. Dish TV itself is up about 10% in the pre-open. Though in Dish, there is a spanner in the works because SES, the investor advisory firm, that's not agreeing with the way Yes Bank wants to move forward. It's looking at certain legalities, including an INB ministry approval. So it's not really in support of Yes Bank's move to move out Jawahar Goel from Dish TV, which is also, run. The original promoters used to be the same. In any case, Abneesh, I want to come back to that point. The market is in absolute euphoria mode, and surely with the new management, new focus, they'll be re-rating. The question is, what's fair value? What's the multiple you would ascribe to it? And to what extent do you expect Z to keep re-rating?
Yeah, there are two things here. One is when promoter concerns were not there and media was not seeing disruption from OTT, that time Z was seen as a quasi-FMCG, quasi-consumption play. And there was a discount which Z used to get because it was a media business, but that's how the metrics were. Second, of course, is we have seen FMCG valuation in the last 3 years, in fact, go up. So if these concerns get addressed, if Z's Z5 OTT app scales up, they have taken the right steps. They have cut the pricing to 499 rupee. I think that's the sweet pricing. India is a mass market. Z5 should not compete with Netflix at all. Z5 should be a mass pricing with mass content. If the metrics for Z5 improve, Z5 will start getting SOTP valuation at some stage. Currently, we and a lot of the street give negative value to Z5. We don't give SOTP. So it's a loss-making business. We give negative value. At some stage, it will become like a neutral, and then people will start valuing if the scale up happens. Second, of course, is if the re-rating will sustain because of the economy opening up. I think this stock can trade at 20-25 times also if all these metrics happen. If a wave 3 pandemic happens, I think Z will again suffer on the higher side. As I said, they do have gaps in terms of content in comedy, and in the thriller, they don't have enough content currently. Sony and Star are very strong there. So that is a risk which I would like to highlight. Second is the Dish TV point which you highlighted. There can be moving parts in terms of the EGM, in terms of voting by the minority investors. Those things are still, some level of uncertainty is there. So I would expect the stock to be a bit volatile. Yes, because of the euphoria, because marquee investors come yesterday, I think the stock could remain strong in the near term. But from a medium long term, we see this as a quasi-consumption play. And Z5 could be a big value generator over the medium long term.
Okay, a big value generator over the medium to long term. Just two quick questions. What is your target price on the stock? Because it looks like it's going to open with big bang, a 10% move today. So at this 280 price, is the risk reward still favorable for long-term investors? And what kind of premium would you ascribe to the fact that the SL Group's influence on Z's capital allocation decisions now could diminish because of what's happened? So how much of a premium would you give to the stock because of that?
Yeah, so two things. In the last 1 year, the current Z management has taken feedback from the shareholders. So, for example, Sugar Box, which was completely unrelated to the business, that has been defocused. They are giving related party transactions on a quarterly basis, quarterly balance sheet, which is very rare for Indian companies. They're giving that. On the board level, they did some changes, but it was not enough. And that's why the stock did not re-rate. It, in fact, languished. So this is just the start. So I would say this stock 3 years back used to be even 550, 600 rupee also. We have seen, in fact, just some correlation. If I see, Imami also faced a similar promoter level debt concerns. Of course, they addressed it fast. And now if you see, Imami is back to what it was in terms of before the problem, what the stock was, it was back. Do I see Z going back to 600? I think that will be very difficult. FMCG is not facing disruption, unlike, say, media sector. So I would say this stock can definitely re-rate further. And at current price of 280, from near term, as I highlighted, there will be volatility based on news flow. But I would say because of the Z5, because of the opening up, the re-rating can sustain. And this stock, we have a 343 target price, but I would say that's conservative. If all the tick marks happen on Z5 and the board level improvements happen, I would say that this stock can go well beyond that. But 600 to me looks difficult given media will see disruption from OTT.
I'll have to leave it there today. Thanks a lot for joining us. Even 340 would be quite a bit of move, considering that just a few days back it was 170. It sort of has settled now. I don't know. Now it's, I think, more believable rate, because it would have been just crazy if after 45% move it had started another 10% higher. But crazy things have happened in this market. The pre-opening rates are still on. Let me just get back to Deven. Deven, the stock that I want to ask you on is Kotak Mahindra Bank, because that's been making a big comeback.